All right, let's talk about a massive shift that's happening right now, right where Wall Street and crypto collide. And believe me, this could completely change how we all think about trading. So, Robinhood just launched 24/7 trading for huge US stocks like Tesla over in Europe. I mean, that sounds pretty revolutionary, doesn't it? But here's the thing, here's the puzzle. When you hit that buy button, are you actually buying a piece of Tesla? Because the answer to that question uncovers a much, much bigger strategy hiding just beneath the surface. So, okay, if it's not a share of stock and it's not a crypto token that you can just send to your own wallet, then what on earth is it? Well, it's this new kind of financial product, and it lives in this weird gray area. And if we can figure out what it is, we can figure out Robinhood's real master plan. To solve this mystery, first, we've got to understand the two competing ways people are trying to bring stocks onto the blockchain. You can think of it as the mirror approach versus the map approach. All right, so this really breaks down into two totally different worlds. On one side, you've got Robinhood's mirror. It's basically a derivative that just, well, mirrors the price of a stock. You don't actually own the underlying asset, and the whole thing lives inside Robinhood's closed, regulated system. Then on the other side, you've got the crypto-native map. This is a true one-to-one tokenized stock that you actually own and can withdraw to your personal wallet. It's the purest dream, but it is a total minefield when it comes to regulation. The tool Robinhood is using here has a name. It's a contract for difference, or CFD. The easiest way to think about it is like you're making a direct bet with Robinhood on the price of a stock. You and Robinhood agree to just swap the difference in price from when you open the contract to when you close it. You get all the financial ups and downs of Tesla, but you never, ever actually own the stock itself. So, Robinhood picked this mirror path because it's fast, it's simple, and, this is the big one, it keeps them on the right side of the regulators. But that just brings us right back to the real question. Why even bother doing any of this? What is the master plan here? Well, the answer to that master plan is all about the money. And to really get it, we need to pull back the curtain and see how Robinhood's profit engine actually works. Robinhood, they're famous for zero commission trading, but it's not actually free. Their main business is something called payment for order flow, PFOF for short. Here's how it works. They take your trade, they send it to a huge market maker like Citadel, and in return they get a little rebate, a little kickback. That is the engine that powers their entire business. Now, just look at the rebates Robinhood gets. For stocks, it's tiny. Just 0.8 basis points. For options, okay, it's 10 times better. But for crypto, it's a jaw-dropping 35 basis points. The profitability here isn't even in the same universe. Let that sink in for a second. For every single dollar of profit Robinhood makes from a stock trade, they make about $45 from a crypto trade. 45 times. All of a sudden, their obsession with crypto starts to make a whole lot of sense, doesn't it? Just like one analyst put it, crypto has become Robinhood's biggest bet. This is no longer some side project for them. It is the absolute core of their financial engine. And that incredible 45x number, yeah, that's just where the story begins. The whole zero commission thing is hiding even more profit, especially when you step into the world of crypto. See, on top of that base rebate, Robinhood also gets money from something called a routing premium and from slippage. That tiny little difference between the price you click and the price you actually end up getting. When you add it all up, their total take on a crypto trade is actually closer to 57 basis points. They're capturing almost half the fees of an exchange like Coinbase, and they're doing it all while telling you it's zero commission. And here is the masterstroke. That payment for order flow model for stocks, it's banned or heavily restricted all over the place. Europe, the UK, Canada. But for crypto, it's the Wild West. Globally, there are pretty much no rules, which means Robinhood can run this hyper-profitable playbook everywhere. So at this point, the motive is just crystal clear. Take the incredibly lucrative, unregulated business model they've perfected in the crypto world and apply it to, well, everything. And that brings us to the endgame. This whole thing is building towards a really radical vision for the future of finance, a future where the lines between stocks and crypto just completely disappear. Remember the whole GameStop saga? Robinhood had to shut off the buy button, and everybody screamed conspiracy. But the real reason was a deep flaw in the plumbing of the financial system. The stock market runs on what's called T+2 settlement. That means trades take 2 whole days to finalize. So as the GameStop chaos was exploding, the clearinghouses demanded Robinhood post 3.7 times billion dollars in collateral. They only had 700 million. They had no choice. But what's the on-chain solution? Trades settle instantly. That multi-billion-dollar risk, it just goes away. So here it is, the grand vision. First, you tokenize everything: stocks, bonds, maybe even real estate. Second, you trade it all on-chain, 24/7, with instant settlement to solve that GameStop problem for good. And third, this is the real prize. This allows Robinhood to apply its massively profitable crypto PLFF model to the entire universe of assets. In a future like that, traditional exchanges like the NASDAQ could start to look like relics. It's a future with incredible efficiency and incredible access, for sure. But it leaves us with one really critical question to think about. If every asset we own is traded with the hidden fees and the murky structures of the crypto world, who really wins in this revolution? You, the investor, or the platform that designed this system?